What's going on, y'all? This is YC of Option Snipers University, and this video is essentially a tutorial on how to execute on our swing plays, okay? Our brand new swing plays channel. You would see it under sniper signals, and then you would see swing plays if you are a part of our community, okay? Now, if you aren't a part of our community, you want to make sure that you reach out to one of us to make sure you get access, okay? So, as far as the swing plays are concerned, we have the idea of getting into a trade and getting out of it with profit, okay? So these are essentially trade ideas. Now, what you would see with the trade ideas is the duration that you're supposed to be potentially holding on to this trade. So at the top of this, we see monthly, okay? That means essentially we should be looking to take profit after about 30 days. Now, if we do see profit on this trade prior to 30 days, it's up to your discretion to go ahead and take your profits, okay? But that's essentially to just let you know that this is what we should be expecting, or how long we should be expecting to hold on this trade, okay? It might say daily, it might say weekly, it might say monthly. This example right here says monthly, okay? So with what we see that we're going to be opening the trade, and that's why we would see green here, okay? The updates would be blue, and then closing the position would be red, okay? Now, you want to make sure that you're reading the actual information inside the post so that you know that you're following the right trade, because as you can see, we have different trades going on at different times, okay? We had different trades opening, right, even before some were closing. So you want to make sure you're reading it, okay? Now, I'm going to show you how to read this line right here and how to execute this in Thinkorswim. Okay, so this first ticker right here is T row. Okay, so for this trade, we're going to be trading T row price. Okay, so this is the ticker. This is what you would put into Thinkorswim, TROW. Okay, then we have our expiration. This is the expiration for the options trade. Okay, January 17, 2025. Okay, then we have the strike price, which is 125. Okay, so we're going to be looking at that in Thinkorswim as well. Then the decision we're going to be going with is a call. Okay, so we would either have a call or a put. And then we have our premium price. This is the amount of money that we're going to be spending on this trade based on the time it was posted. Okay, now this is very important. If you see this trade posted, you want to make sure that you're trading on and executing on this trade very near this date, or this time rather, okay, so that you can make sure that your premium price is close. Okay, so if you come and you see this trade and it's about 2 or 3 days later, it may be too late to get into that trade. Okay, you potentially want to enter into that trade basically the same day, almost the same time that the trade is posted. Okay, so that's very key there. Now on the second row, we have PT1, PT2, PT3. PT1 just essentially means profit target 1, profit target 2, profit target 3. Okay, so profit target 1 shows you that we should be seeing a sell of $2.10 after buying in at $1.65 or $1.75. Okay, so this would give us a profit of about $40 to $50. Okay, then profit target 2, we have an increase, and then profit target 3, $3 or more. Okay, so essentially it's to say we should be seeing upwards of $3 of a sell on this trade. Okay, so the profit would be calculated as taking this number here and then subtracting it from this, okay, which is what you would get as far as your profit. All right, so then we have our stop loss. Our stop loss is when the price, the ticket price itself goes below $105.50. Okay, so when we look at the profit targets and the premium price, this is for the actual options contract. Okay, so the options contract is going to show this amount. Okay, but then the ticket price itself for T row is going to show 105 and 50 cents. Okay, and we're going to look at that right now. Let's go ahead and go into Thinkorswim. All right, so we're here in Thinkorswim. We have T row already selected. We're seeing that T row's current price is at $123. So obviously nowhere near the 105 for the stop loss, which is all the way down here somewhere. Okay, T row stop loss. We signified would be all the way down here. Okay, and we never got that low. Okay, so that's one thing. All right, so we're gonna go ahead and go to the options trade. So once T row is typed in here, we're gonna go to trade. Then we remember that the expiration is January 17th, 2025. Okay, and that's shown here, Jan 1725. So we're gonna hit the drop down. Okay, so we're gonna look for our 125 strike. So that's gonna be in the middle here, strike. We're looking for 125, that's there. And then we're looking for the call side. The call side is on the left side. Okay, the put side is on the right side. So it's gonna be 125, and then we're looking at the options trade here. So what it looks like currently is that the purchase price right now is actually $3. So we've already hit our profit target 3 on this trade. Okay, obviously this trade was posted quite a while ago, at least from the viewing of this, from the recording date of this video, right? So this trade has already hit our 3rd profit target, so we're already in profit. It looks like we're actually almost at 100% profit from where we potentially would have entered. Okay, so if we entered in at $1.50, and then our profit target here is $3, that's 100% gains on this trade. Okay, and as of this video, this trade would have been 2 or 3 weeks of a hold. Okay, about 2 weeks, really 2 weeks of a hold to get that gain. Okay, so that's a pretty good trade idea there. Okay, so you're essentially buying this trade, which would be one contract at $1.65, which would represent $165. Okay, and then hitting a profit target of $3. Okay, so you bought 165 worth, and then you sold for 300, giving you a profit of about 135, I believe, if my math is correct. $135 with just one contract. Okay, so this video is really just showing you how to execute on purchasing your one contract, not necessarily about strategy, how long you should hold it, all those types of things. That would be up to your discretion. Okay, but as far as executing this trade, it would have looked like this number would have said 165. You would click it, you would come here, make sure the price says 165. Okay, we would make sure we're buying the T row, expiration January 17, 2025. The strike is 125. The type of trade is a call. Okay, and then our price we would have wanted it at $1.65. Then all we would have simply did is just confirm and send, and then that's it. Then we'd simply just monitor the trade, make sure that it doesn't hit our stop loss. Okay, if it would have hit our stop loss, that's where we would have exited the trade. Okay, now a very clever thing you can do is you can actually look at the chart of the trade by right clicking. Okay, right clicking on the strike, and then copy, go to the charts. So instead of seeing the T row chart, we're going to go to the actual trades chart. Okay, so this is the action of the options trade. Okay, so if we look at it here, we entered this trade at 165, right, on November 12th. So if we go to November 12th here, okay, so that means we entered in the trade over here, 165, right? So potentially like right here. This is where we entered the trade. Okay, so I'm gonna draw 165. Okay, so that's where we entered the trade. Okay, so 165 went as low as $1 potentially. So we would have lost as much as $65, right? Either realized or unrealized. So if we would have sold at $1, we would have lost $65. Okay, but if we would have held, we would have went as high as, wow, so we're even at $3 today, but it went as high as 325 here. Okay, so we get in at 165. We went up as high as 325. Okay, and as low as $1. Okay, so there's essentially a risk to reward. It looks like, as far as the trade after the fact. Obviously, you can't really um, calculate risk to reward after the fact, but as far as what it looks like here, that's essentially what would have been occurring. Okay, so that's also how you're able to look at a chart for the actual options trade. Okay, so let's say you actually enter into the trade. At that point in time, you would then exit once you have the profits that you're looking for, and you want to go through the course in order to do that. As far as knowing how to close the options trade. Okay, but it's very easy to do. All you really do is just go to your trade and then select close position. That's it. All right, so I hope that helps, and if you have any questions, make sure you reach out to us on Discord. All right, guys, chat soon. Peace.